Greetings. This is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Tuesday, March 3rd, 2026. And what a day the day was. Right now, things are kind of dreary. I titled this one War-Induced Sell-Off Deepens. We'll go into greater detail. Again, my name is Dr. Jeffrey Scott, marketmripro@gmail.com. My Google Groups top-down trader website, marketmripro.com. As always, these are for educational purposes only. Anything we talk about should be taken in the spirit of education, not investment advice. Trading involves risk, and you alone are solely responsible for any investment decisions you make. And trading stocks and options can be risky, so you should always be consulting with your financial advisors. We're going to focus mostly on the market today. Um, I don't think I'd be doing you a service by saying buy the dip, buy the dip, buy the dip, because I don't know if that's the right answer yet, but we'll look at that and see what we see in the markets. Right now, the Dow's down 118, 113, NASDAQ down 53, E-minis down 13.75, Russell down 8.4. So compared to the last several days, as far as they have gone, the market's actually holding up pretty well after hours. From an earnings front, and some of the big names are done, but there's still some companies that matter to come out this week. Ross Stores up 5.8, Dropbox up 3.7, Moderna up 9.4% on a settlement agreement, WBTN down 13.6, STAA down 11.2, GTLB minus 8.3, and CrowdStrike down about 1% on earnings. So compared to the last several days and nights, down, but clearly much less down than what we had been seeing. That was weird. My Google group is called Top Down Trader. How do you join Top Down Trader? It's simple. You go to Google Groups, sign in, look for all groups, find Top Down Trader, and let us know how you want to be contacted. It is the only mailing list I keep. And the best part about that mailing list is I don't control it, you control it, so you can quit anytime if you feel like I am being intrusive. Know your news and earnings. Well, we're about to take our employment journey. Let's think about the data that's come through lately. GDP came in less than expected, so fears about slowing economy. The jobless numbers have not been horrible, but new job creation has been, and we're hearing more and more about layoffs in tech land, AI replacing humans in the workforce, so a lot of fear there. So I think the next 3 days with employment numbers should be interesting, and yet we still have lots of inflation. We've got the war in the Mideast, which means Straits of Hormuz are essentially closed, so oil's going up. Oil's high oil price. It's going to make impact somewhere. It's probably inflationary from the perspective of our spend goes there, but it's probably going to hurt the rest of the economy as money goes out of buying consumer discretionary. So interesting time. So we get ADP employment, PMIs, and the Beige Book on Wednesday, followed by the jobs claims, productivity, price indexes on Thursday, and the monthly employment report on Friday. It sounded like our Fed heads today were mixed, one thinking we need more cuts and one thinks we need more data because of the fear about the impact of the war. Tomorrow, Wednesday, we got Abercrombie and Fitch in the morning. Probably the one I care most about. Broadcom, I think a lot of us care about that. Rigetti, Viva, Okta after hours. So there's still a very busy day. And we still got Costco, probably the big kahuna of the week on Thursday. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. For more information, you can reach me with any questions, comments, concerns, inquiries about the software at marketmripro@gmail.com, and for support of the program, coding at marketmripro. So yesterday I had some challenges, and the I mean, I'm not a dumb guy, but it was a dumb problem. Um, the I didn't realize that when I got the beta version for 26, and you all have 25 if you own my product, version 25, 1.25 or whatever it is, that it points to a different URL. For whatever reason, Viper's web filtering causes issues, and you have to put the website in as an exception, and you don't have the issues anymore. Well, I use Viper, and I didn't realize that the beta version that I was using pointed to a different website. So Praveen and I changed that, and it fixed the speed program problem considerably. We still have the issue that it's on its own separate, smaller server, but it is what it is. If we look at the markets today, a lot of red. Volatility up over 4%. That's never good. Dollar flight to safety up 0.48. And then you could see all the major ETFs were down. Bitcoin was down 1.28. Russell, the weakest, down 1.74, 1.07 for the Qs, 0.88 for the spiders, 0.75 for the diamonds. If we look at change from the open, the interesting thing is we actually finished off the lows of the major ETFs today, which is nice to see all of them, and they're also all up from the open. And you could see finishing in the upper part of the range, but they were still decidedly negative with really horrible breadth. If you look at the 52-week or 12-month new high, new lows, we've now gone negative on the NYSE. That's not good, and deeper negative on the NASDAQ. If we look at breadth, you could see whether you look at sectors today versus Monday, industry groups, and depending on which index you look at, you could see deterioration considerably. And then how many stocks were up? Well, in the S&P 1500 it was 29%, 29% in the NASDAQ, and 25% in the NYSE. So when 3 out of 4 stocks in the markets are down, and you have a portfolio, you probably had a rough day today. If we look at S&P 500 sectors, leading is communications and just so much, up 0.08. The laggards are materials down over almost 2.5%, industrials down almost 2, and then 1.46 on technology. So again, another tough day, and we'll see where we end up tomorrow. From a theme perspective, cannabis is up the most, followed by software, cybersecurity, cloud computing, and then everything else was negative. And as I'm sure you're aware, software has been very weak because of the AI concerns, and it has been rallying some this week. Negativity, silver down another 8.92%. Gold miners down 8.76. Uranium got clobbered down 7.88 after a pretty strong day yesterday. Copper was down 7%, lithium 6.5%, clean tech 5.5%, autonomous vehicles 4.5% or 4.1, depending on which one you look at. Internet of Things 4%. Bloodbath. Was it enough of a bloodbath that we're going to obviously get a bounce? I don't know. Let's take a look at what the signals show. Should we be thinking time to get back in or time to run from the hills? And I think that's a legitimate question. Let's look at the timing model. Remember, the weekly will repaint until the week is over. The daily, by the time we're doing this, it's done. It's not going to repaint. So if we look at the daily, we have lost all 4 ETFs. So the Qs, which had flipped to positive, have now flipped back to negative. And what you could see here is just a significant breakdown across the boards on the short term. Now, we don't overplay the short term, but they're dropping. And if I look at the weekly, the more intermediate term, you could see that we lost today the spiders and we lost today the Qs. Now, as an example of the repainting during the day on a weekly chart until the week is over, at one point during the day, I looked at it before the markets rallied, and the Russell and the diamonds were in a sell signal as well. Now, if we go out to the monthly, it's probably holding up, but I haven't looked yet. It's so far away from the WMA. Even if the bond goes flip-flop, I'm not too worried. So I put this together as decidedly worse. I am in a no buy zone. I am in a lighten up area. And, you know, I buy a lot of option spreads. Typically, those spreads are relatively cheap. Um, when the market gets tough, by the time I realize it, there's not a whole lot of money left in the cheap options if they have not moved. And the ones that are have money in them, I'll take those off. But if you're sitting in positions and those positions are not protected, you don't have a little bit of money in them. You have the full price of the stock. So I start by taking profits on the ones that have profits in them. I'll start to peel off the ones that are not, that still have enough money in it, and I'll leave myself with some remaining skeletons. But again, a broken wing butterfly, a vertical spread, these are not expensive option plays. Um, and that's one of the, I won't say fallacies of options. Options can be very risky if you don't know what you're doing, especially if you take naked shorts and you don't know what you're doing. To say it's risky is a way big understatement. Uh, it is horribly risky. But if you understand options, you can design your trades so you're risking a couple bucks on a trade. You're not risking an infinite loss. All right, enough of my babbling. Let's take a look at the indexes. Here is the spider. Spiders have now broken down. It's kind of like the faucet. Does anybody not believe that it's going to move down to the 200? That has to be my working hypothesis. That's the bear case. The bull case is that, we finished in a nice position today. We're still below the 50, excuse me, the 100. We're below the 50, the 17, the 21-day EMA as well. The bull case is we blow right on through this and head up to new highs. The bear case is we fail here and we go and we probably come down into this range. And the intermediate cases, we just bounce around at this level. My guess is that we probably don't retest the 200, but we can. But how do I know what the answer is? Seasonality is not great. The chart looks horrible. I wouldn't be buying in the S&P until I saw it get above the 100 and stay there at the minimum. If we look at the Qs, interesting, also selling off. Did not, it's a down day today, down over 1%. Not too far from the 200. Look at the seasonality. To me, it seems a fait accompli that it's going to hit the 200. The diamonds, diamonds plowed through the 100, which has been a decent place for them to hold. And they're breaking down. They've got some negative seasonality for a few days, and then they should bounce. Long way to 200. Hopefully, we don't go all the way down there. The Russell, which had been looking okay, actually had an interesting day today. Almost traded down to the 200 and touched the 50, not the 200, the 100. Touched the 50 and almost touched the 100. Does it go sideways in here or does the seasonality pull it back? Time will tell. Keep in mind, we're not talking about markets that have sold off a ton. In fact, if we go from here, up, try that again. It takes me forever to figure out my drawing tools. Down to here, we have sold off in 40 days 7.2%. So we're in close to correction territory. Certainly not a massive sell-off. We haven't had one of these in a while. Does it break below the 100 and then start to think about this? Boy, I hope not. Let's hope that 100 support. Let's hope it's already heading back up. We won't know until tomorrow. VIX, boom, shakalaka, boom. Now here's the interesting thing. This is the same place that we peaked out in November and prior to that in October. If you go back to April when we had the major low, you could see a very different VIX. So we'll have to see if today's VIX reversal is meaningful. If you look at it like this, it sure looks like. Think about it. It opened here, traded as high as here, as low as here, and closed right here in the middle of the range. It's still way off of neutral, and we still got this worrisome trend going up on the VIX, which is not what you want to see. Also, with the entropy of the markets, no surprise that the dollar rallied. And, at some point I'll become worried about this. This is a pretty big break here, up 0.5%. But I don't forget this and how far down the dollar is. Now, can it get midway up? And does that pressure the stocks? It might. So something to think about and be aware of. If we look at commodities, gold sold off today, like everything else here, down 4.5%, pulling into the 21-day EMA, a natural place to bounce. I'm not convinced gold is over. Right now, it's about black gold. Silver, silver's now broken below the 50. And yesterday I said, I was surprised, or the day before, that silver has held up as well. We go back to 2011. It didn't. It took a decade or more to get back to new highs. I still think it's going to consolidate in here. We'll see. Black gold rallied at the morning, jets and bombs and concerns about the straits, and closed kind of in the middle of the session, but still up 3.4%. So USO showing us the pressure on the energy complex. Natural gas, it's going to rally here, especially with the natural gas prices zooming higher in Europe. But like oil, it closed down towards, well, a little bit below the center of the range. If we look at yields, and this is the bad thing, the 10-year really was flat, but look at how high it got. It blew right through the 17, and then over time today it actually closed closer to the low of the session. And if we look at the 30-year, you'll see the same thing where it opened here, so big gap up, traded higher, traded lower, and closed with just a minimal, with it actually, what's the close here? It was down 0.13%. If we go and look at the buckets, we haven't shifted enough to the left to be a signal. We are starting to build up stocks below the Bollinger Bands. 14% on the stocks below the NYSE, below the Bollinger Bands, 12% below the bands in the S&P 1500, 10 in the NASDAQ, and 12 in the Russell. You want to see what a bottom looks like? I like to remind people of what a bottom looks like. This, folks, is what a bottom looks like. Student body left, everything shifted below 76, 79, 66, and 53% of stocks below. So it could be a bottom. I doubt it's a bottom, but we are going to get to the point where we're short-term oversold, and we might expect at some point to see a rally. Market breadth, lots to unpack here. Let's start with the NYSE. NYSE is in the process maybe of breaking down. It traded below the 50 but closed strong today, so it hasn't broken down yet. Stocks above the moving averages heading down, certainly not down to signal level. For the first time in a long time, the new high minus new lows went to negative. AD line was negative, and down here the up-down volume was negative. Hot off the press, we had another Hindenburg omen today. We have confirmed Hindies on both the NYSE and the NASDAQ, although the NASDAQ's already broken down from that period of time. These are typically followed by a correction. There's never been a major market collapse that wasn't preceded by one, but only 1 out of 4 are significantly down, like 10, 15%. All the signs suggest to me that the NYSE is going to catch up to the NASDAQ, not the other way around. The NASDAQ has broken down. It is trading above the 200, actually opened, traded closer to 200, and then rallied and closed higher. Stocks above the moving averages trending down. All three new highs, new lows. The AD line and up down volume are all negative. Now, the most important thing on this chart, I think, is this 0.33 for the 13-week new high, new low. So getting closer to reversal territory, not there. And 0.18 on the NASDAQ. We start looking for reversals when we get down to that level. It can certainly go lower, but that was a pretty big drop in one day. And like I said, it can go lower, but it's starting to get interesting there. If we look at the ratio charts, you can see strength is in materials, communications, energy, staples, industrials, real estate, utilities. What's bad is discretionary, technology, Bitcoin for sure, and then financials. Bitcoin I know is not an S&P sector, but I like to see how it's doing because I think it's a meaningful instrument. If we look at the larger market breadth tool, let's just focus on the green. 0.41 on the spiders, 0.33 on the S&P 1500, so dropping. But that 0.18 on the NASDAQ and 0.25 on the Russell are both getting low enough that now we're starting to think that a reversal could be close. It can go all the way down to zero, and in the big reversals, commonly does. You can see here was 0.14, so not much different. So we're going to watch that closely. We know we're at a point where reversals happen. If we look at the non-ratio charts, sector charts, just very quickly see anything that's different. Bitcoin struggling, setting in a base down there, not interested. Technology seems to be holding at the 200, still not interested. Discretionary, this is bad. It held for a few days and has broken down. Not a good sign for the bulls. Communications had a strong day, but it's kind of like going up, down, up. We'll have to see if it declares itself. Neutral. Industrials open lower, traded lower, closed almost near the open, giving us a hammer signal. I think that's a bullish red candle, just off of its all-time highs. Still looks fine. Financials trying, but they've broken down. Energy, one-day weakness doesn't mean anything. Remember, it gapped up. Oil closed in the mid-range. I think some of these small, what I didn't pay much time to yesterday, BALL or something, which is a very teeny-weeny oil exploration company, they really seem to benefit from higher oil prices. But that still looks strong, just off all-time highs. Materials, which has been a leader, this is a breakdown, gap down here, so that's something new. Real estate traded down to the moving averages and closed a little bit off them, stable. Utilities, big topping candle, but closed higher. Actually, it didn't close higher, it closed off. It closed higher than the open, but still lower on the session. Staples, we'll see if it holds above the moving averages, a little bit of weakness. And then this is healthcare, pretty much going sideways. All right, and then lastly, let's look at some of the big stocks that I know you own because they're in my long-term portfolio. And I ride through most of these corrections with my long-term stuff. I'll buy some contras against it. Amazon, well, the good news is it's had a higher high here, now a higher low. Can it give us another high and continue an uptrend? I don't know. Not a bad looking candle today, though. Not quite a bullish engulfing, but pretty darn close. That's a bullish candle. Amazon was down quite a bit. I didn't even notice that it came back and closed 208. That's pretty significant recovery on Amazon. Like that. Apple struggling to get above the moving averages. When it does, I'm probably a buyer. Google, I'll say the same thing, although it looks a little worse here. Meta, no. Netflix, Look, Netflix has given us a nice bounce. We talked about it getting up to the 200 and then deciding what to do with it. I think it goes higher. I think the shareholders are happy that it didn't buy Warner Brothers. Tesla, well, I know we got lots of Teslonians out there. It's on the 50. I think I'd wait, excuse me, it's on the 200, not the 50. I'd get more excited when it gets up above the 50. Nvidia, all things considered, where did my green box go? Holding up relatively well off, here's the prior highs, kind of in a trading range here. I thought it would break out one way or the other after we saw the earnings. It was down a bit today, pulling into the 200 might turn out to be a good buying point. But and again, I have a big position, so I'm hopeful. Microsoft, is it ready to buy? It's kind of a bottom fishing play to me, although a move above the yellow, it starts to get close to a daily buy. Still not buying it. Leibu, did it break down today? I'd like to see what happens at the open because we've had seen some pretty good recoveries, but biotech clearly weakened today, as did pharma, as did data centers breaking down, as did ITA, which is transportation. Still hasn't broken all the way down, but had a rough day. This is one that was actually, ITA was one that was actually up for a while today. I didn't see the close. I was too busy working. Um, so interesting. Going to war and defense is down in the market, down 2.24%. Now, normally I go show you things to buy. I'm going to look, but I'm not advocating. I'm advocating pruning your portfolio, looking at every position you have and asking yourself, would I buy it today? Ignore the market, but would you buy it today based upon the current chart? And if the answer is no, take half off or take it all off. Why would you hold it? So this is my favorite part of the program. Believe it or not, it's a JAS layout. It's got my chart on it. It's got my scans. And the first thing I like to do is take a look at the A plus. And the A plus shows me one stock that was met the signal. It must have had earnings today. Let's see. It had had earnings after hours last night, so had a little bit of growth and a beat, somewhat of a revenue beat. Um, I've learned over the years, Wall Street expects you to hit your numbers, and those are already priced in. Whatever your growth rate is, whatever multiple you get, and the way you make a difference is you beat or you miss. Not a giant beat, but a pretty big beat on revenue. I wouldn't be chasing a lot right here. And if you have the program, you can bring up the news and then pick any of those things if you want to read them by clicking on the link. One of my other favorite tools is to look in at the A scan. All right, let's see KTB. KTB is Cantor Brands, Staples, cyclical, um, earnings out, beat on earnings, big beat on revenue. That's the theme here, I guess, if you have a big beat on revenue. Junky looking chart. The good news is you can probably give it credit for breaking out of the downtrend. And it might turn out to be a great buy. Look at the volume that came in, the CPR, gap volume, breakup momentum, great relative strength in OBV. So I like this, and it's above the 200. If I had to buy something, that one looks interesting. Plus, it's de-risk. Earnings are out. SEMR. Semi-Rush Holdings looks like a buyout. And then Target. Target was up today. It actually pulled my Walmart up today. This is the server that I talked about that's slow and the frustration I had last night. I don't want that one. I want Target. Here we go. All right, let me keep my hands off. It'll switch. There you go. Beautiful uptrend, pullback, breakout. I think they recently had some leadership changes. You could see what happened on the news. Earnings came out. Um, Target looks to AI for sales momentum. New CEO focused on growth. That's all good stuff. Let's see how it did on the numbers. 244, which had a big earnings surprise and a revenue surprise. Might be another interesting story. I've been long Walmart for some time, and frankly, I thought Walmart was kicking their butts and had a better management team. Walmart up. See if we can get Walmart up. Well, I will either be switching back to version 25 or getting an updated version of this tonight from Praveen. I know he's been working on the issues I had, and we're going to have to move it back to the other server. Not even looking at the top-down view today because I'm not going to find something to buy. What we could do is we could, just out of curiosity, how many stocks made it to my super scan, super filter 144. Still a fair amount of red. Just out of curiosity, can we map this? Yeah, that's not functioning. Got a few issues with this version of the beta, but that's why it's a beta and that's why I'm using it. And I'm just a silly person who uses a beta version to do his videos, but I can't have two versions on my computer. All right, so let's see if these will copy over at a test from the webinar. So these would be today's, yeah, no, Praveen's been doing a lot of things underneath to speed up the scanner, so I'm not going to push the issue. Let's just quickly look at the contra ETFs. And are they in here? I meant to put them in. I don't think they're in yet. All right, so let's go. Nah, well, we could put them in. Let's do this. Blow it up. Contra ETF for the diamonds is called the dog. This goes up when the diamonds go down, breaking out. Now, I think I want to put on this, not the timing model, but I'd probably want to put, all right, this looks interesting here. It's broken above the 50, it's broken above the 17th. It didn't close above it. Look at the big volume that came in. All right, next one. Let's switch. Do you see how I store my different layouts in here? So all I got to do is touch that to do that. And let's look at SQQQ. This is a tool that will go up when the Qs are falling. And when we see it, when it loads, if it loads, it'll probably show us some significant opportunity. All right, I'm going to try one other option here. And I don't mean option like options. Let's see if this is going to load. All right, so we looked at dog and we talked about dog is goes up when the diamonds go down, breaking out. FAZ, this is one that will go up when financials go down. Had a split here. Have to ask Praveen to adjust that, but you can see it's breaking out here. SOXS will go up when semis go down. This one has started to move, but semis have held up longer. SPXS will go up at the S&P 500. It's now moving. Target might be the 200. SQQQ goes up when the Qs go down. You could see it's broken out, starting to move. And lastly, TZA will go up when the small caps start falling. They're starting to move. It is difficult to short after a couple of really down days. The natural expectation is to have a bounce. And if we get a bounce, you can ask yourself, should I expect it to bounce and move up to all-time and new highs? Or is it going to bounce, make up some of what it lost, and then drop again? And I'm in that camp. So I'll look to short on a rally. If we rally tomorrow, I'm going to be pruning profits, reducing my exposure, and if and when that rally fails, I'm going to look to enter some shorts. The other thing I just want to point out is rallies in bear markets can be ferocious. We're not in a bear market yet, but we're in a falling market. So, um, if you look at the top 10, 20 bullish days, most of them occur in a falling market. Be safe, raise profits. You'll have plenty of time to get in when the market's done falling, but you got to have cash left to participate. Again, we'll get through those glitches that I'm having on some of the charting at the end there. Um, we are constantly updating the software, trying to make improvements, adding new features. I get the first version. My job is to break it, so I'm mixed. I'm actually happy when we have issues because I'm able to then relate them to Praveen. The more I use it, I try and find things. If I find things, we can fix them. And then 26 will come to you once we've got it all stabilized. Take care, everybody. Have a great night and trade safe.